how's it going? Welcome back to Lunch of the Market. You know what? It turns out that we didn't actually lose our mind on May the 17th when we told you to sell absolutely everything. In fact, if we had told you that on May 18th or 19th, we would have looked like flipping geniuses because the market rallied only to sell off bad. And then it rallied one more time the last day of May, only to then the first day of June absolutely crater and undo all of the good work that had been done getting us back up to around 1340 in the S&P 500 index. The reality is that last summer we saw a 16% decline in the S&P 500 index from start to finish. The reality is now that with today's bounce, it means that we're right around 5% from the most recent highs, which means that being only a couple days into June, we could see a whole lot more pain to the downside, and frankly we don't want to be around to see it. So what we didn't sell or take off on May the 17th, we're actually taking off today. Yep, that's right folks, we're done. We're going to be net short from here until further notice. So when we bring you Lunch of the Market, we'll bring you ideas, great ideas for your watch list, but the reality is from now until we get at least a little closer to earnings, which is going to be the second week of July, the last thing that we want to do is sit around and stare at a market that goes down for 6 weeks in a row. And with a bare bones correction, we haven't even seen a correction. A correction is down 10%. We think that by the time the summer is over that there will have been a correction, meaning a 10% decline in the S&P 500 index from 1360 down to a 10% decline will get you 136 points chopped off the top, and so that ought to get us around 1230, 1225. We are way away from that right now, guys. We are 70 points away from a decline all the way down to 1225. So the reality is we're just not interested in trying to pick stocks right now. There are great bargains right now in the marketplace, absolutely attractive valuations. We're at 1292 in the markets. Just wanted to watch the ticker go by to get you the most up to date. Guys, 70 points is not something we're interested in sitting around. So what we are doing is we're buying August puts. The goal is to sell weekly puts against those August puts every single week until we completely recover the cost, making our trade absolutely neutral, meaning it doesn't matter which way it goes, one way or the other. Ideally, those weekly puts will expire each week, and then at some point we get a big flush, a big huge down day in which those puts are up 20, 30, 40%. We're taking them off at that point, and we will look to start re-entering the market at that point. Once we get to around 1250 in the S&P 500 index, we feel much more comfortable adding. But the reality is that all the worries that existed yesterday, in which everybody hated the market, have been completely brushed under the rug today with the bounce. We think this is just simply a dead cat bounce, and we're not interested in sitting around watching our gains go away. So with most of our accounts either up year to date or on the flat line, you know what? The safer bet right now is just to sit back and watch on the sidelines. Most losses right now can be made up in the back half of the year. So don't hold on to things hoping for a turnaround. That's not how you make money. You make money either buying something and selling it higher, or selling something and buying it back lower. Do not get stuck in a trade just because you have a negative in front of it. That's not the way that you make money, and certainly not going into the summer. So again, until the void from economic data and no earnings is satisfied, meaning we get to the second week of July, we're going to probably be bearish on the market unless this correction happens sooner rather than later. So until then, goodbye to most of our positions. We'll keep you updated. If we see great short opportunities, we'll certainly bring those to you. We're doing a lot of research over here as to what could go down. So anything that's stuck in a downtrend, we're going to be buying puts on, and then hopefully taking those off for more money at lower prices. All right, thanks for joining us again today on Lunch of the Market. Please be nimble, please be careful, and please join us again tomorrow for Lunch of the Markets.